Good morning, welcome to IG's Early Morning Call. It's Thursday, 14th of September. Let's take a look at the headlines as we wait one of the key pivot events of today, and that's the European Central Bank interest rate decision. It is on a knife edge, and we've got the dollar near 3-month highs against that euro after yesterday's CPI data in the States, a touch higher than had been expected, but it's all down now to the wire for the ECB at 1:15 p.m. today UK time with that decision on interest rates. One of the biggest IPOs of the year starts underway on the markets in New York today. ARM shares priced at $51 each, and this gives the valuation and market capitalization of the group at $54 billion. Is it a good deal for Softbank, the owner of ARM? And taking a look at what's happening with the price of oil. Yesterday, we saw new 10-month highs. Prices settling today after EIA inventories rose yesterday, offsetting expectations of tight supplies. Just when you thought it couldn't get any lower, the volatility index is ticking down again today. It's down a further 0.5%, and you can see not too far away now from the lows that were established intraday back on the 27th of July. Yesterday, I think I'm right in saying that we were very close to closing at new multi-year lows, but in fact that's not the case. If we close where we are today, it will be the lowest close that we have seen since before the war in between Russia and Ukraine, and so we're very close to levels not seen since the 17th of February 2020. Now let's take a look at what this means for other areas of the market. We're looking for strong gains at the start of today's trade, and in fact in today's session the intraday trade has peaked up at levels not seen since the 11th of August here in the London markets, as we see a continuation of these oil companies benefiting from this rise in the price of crude. For those small cap watchers, I notice actually that Jersey Oil and Gas reported good numbers out this morning. I won't be covering that in the next 15 minutes, but certainly one of the stocks to watch in the oil sector, which has benefited from this rise and in the price of oil. So oil stocks up, driving the FTSE up to these new recent highs on the market. Let's move on to take a look at what's happening across Europe. And we see the same sort of price action that we've got, where we're expecting a slightly stronger rise at the start of today's trade after 2 days of declines on the German markets. The gain is not as much as we saw in terms of the downside yesterday, so we've not got clear air like we have on the London markets over recent trade. But nonetheless, we are expecting a slightly stronger start, not just in Germany, but in France ahead of that interest rate decision. You can see they're still continuing to ride that 200-day moving average. The French CAC 40 is at 72.24 on the session at the moment. Let's take a look at what's been happening overnight in the Asia Pacific markets with the trading day there with gains across the board. And indeed, when all was said and done, the Nikkei ended up on the trading day. It was flirting with the negative to begin with, but then things started to motor. Hang Seng Stock Index up on the session today. S&P ASX 100, 200 also enjoying a little bit of a lift. Wall Street yesterday ending with the trading day with the markets on the way down for the Dow, but we saw gains for tech stocks, which lifted the S&P 500 and the Nasdaq Composite up just over a quarter of 1% better off. As I said, we got the ARM Holdings IPO today, which will trade on the Nasdaq, and the markets on the 24-hour markets on the Nasdaq looking at that quarter of 1% gain yesterday. In fact, on the 24-hour markets, we saw this market end absolutely at the high point. So it's late session trading. Let me just quickly take a look at the hourly trade just to show you where the close was as of yesterday's end point at 9 o'clock last night UK time. So you can see since the close of the session yesterday, the Nasdaq continued to climb into the late hours last night and into the early hours this morning, with gains again to 15,420. So with that ARM IPO coming through, a little bit of positivity for some of those tech stocks. Relatively good day yesterday for the S&P 500 and the 24-hour markets, again at the top of the candle in the 24-hour markets at the close, and that's exactly where we're trading there at the moment. With that drop on the Dow yesterday, the markets continue to ride this long-term uptrend that we've got since the lows we had back on the 13th of October last year. A number of touches on that. We have tried to escape below it, but it's failed to close below that. And the markets continue. So if you are trading this and the markets that we've been talking about the last few weeks continue to pull your stop loss up underneath that rising line of support, will continue to lock in profits. Economic data out overnight, as expected, the Australian unemployment rate remaining unchanged at 3.7% in August, with the employment number, though, rising more than expected, with some 64,900 jobs having been found, forecast 23,000. Yet market commentators can't see a case for changing the RBA outlook on interest rates and still think the tightening campaign might be over. They base their case on the quality of this employment number. It looks good on the surface, but if you dig down, that increase in employment is due almost exclusively to a rise in part-time jobs. And that's not what a good, strong economy is based on. 62,100 the part-time employees now, up from the 64,900 that had been recorded. This now takes the number of part-time employees to a record high at just over 4.25 million. Now, on this business about interest rates in Australia, of course, we have yet to have it proved to us in words of one syllable by the Australian Central Bank. But I thought perhaps I'd show you what's going on with the Aussie dollar. In today's session, we've seen the highest intraday print against the US dollar since the 5th of September. 64.40 is what we're trading there at the moment. It's not a massively conclusive upside. And indeed, if you draw a fib on here, I think we'll see that we are approaching the 61.8% retracement, which will give us a little bit of a headwind above where we are. As I said, 64.40 is where we are. 64.59 is where that kicks in, which could be why we've seen that area of the market repel today with a little bit of a pullback. We'll have to see how things develop. But at the moment, at least, if the Australian Central Bank leaves interest rates on hold, it's because it thinks it's conquered inflation. There's no evidence necessarily of that at the moment, but I certainly think that today's jobs market shows that there is a frailty within the Australian economy. Now, the European Central Bank meets today with the announcement on interest rates at 1:15 p.m. today, UK time. It's on a knife edge. For more than a year, there's been a broad consensus amongst the eurozone's monetary policymakers that interest rates need to go up in order to tame inflation. Rates have been pushed up from flat to 4.25% since July 2022. But with signs of an impending eurozone recession becoming harder to ignore, and annual price growth now at half its 10.6% peak, the unity of the direction of travel is fraying. The risk, I think, possibly on the upside, because inflation remains hot. It has yet to be proved to those commentators that monitor this that the European Central Bank has done enough to quell inflation. Let's take a look at what's happening ahead of that decision for the euro dollar. This is certainly going to be an area of the market to watch. It's been flatlining in the last 4, 5, 6 days or so. Currently trading at 107.45. I'd want to see a drop below this line of support for me to take a short position on the euro, but much of what's happening depends in this particular trade as well as to what's going on with the US dollar, where it meets on interest rates next week. We're yet to decide on what the Fed's going to do as well. This is the euro trading against sterling, and we're not too far away now from the peak of this little symmetrical pattern that's building up this triangle. We're currently trading at 85.99, which is absolutely pretty much where the peak is on that. But it's several days away before we end up getting into that. But it'll be interesting to see just how hawkish or otherwise the European Central Bank is today to give some sort of direction to the foreign exchange markets. Will they, won't they? It's all down to the wire at 1:15 p.m. on this Thursday, UK time. Well, now, ahead of that, let's take a look as well at what's been happening with the dollar, because yesterday we saw that slightly stronger than expected number coming through headline consumer price inflation. We've been expecting 3.6%. In fact, we got 3.7%. But in fact, the core rate, excluding food and fuel, was absolutely in line with expectations. 104.30 is where we're trading on the dollar basket at the moment, not too far away from the recent positioning on the markets, but trading mostly higher than the highs that we saw back on the 31st of May, indicating that perhaps possibly maybe some people thinking that there is still another quarter point to come from the central bank in the States. Talking about the States, more stats to come today at 1:30 p.m. Producer prices expected to rise by 0.4% in August month on month. This is another number that contributes to the overall inflation picture. Retail sales also forecast to increase, this by a margin of 0.2% month on month. And the weekly jobless claims expected at 225,000 for last week, up from the 215,000 recorded in the prior week, but still below the 4-week average. So you can see that there is some interest in the economic sheet today. I think retail sales probably going to be the high point of today's trade and possibly the last really big bit of data to come before the Fed next week on interest rates. Let's switch on to corporate. THG, the Hut Group was first half numbers. Adjusted EBITDA up 22.9%. Actually looks quite good, these figures this morning, to 50.1 million. That was above the top end of guidance. Adjusted EBITDA guidance unchanged for the full year. The company says it's seen a successful exit of the loss-making discontinued categories and non-core assets, but it's generated a one-off non-cash charge of £26.2 million, increasing the operating loss to 99.5 million. That's not particularly good, but continuing operations looking pretty good overall. Record first half THG Nutrition revenue up 2.6% to 340.7 million. I think this is the area of the market where it looks particularly good. Adjusted EBITDA up 71.9% for the nutrition part of the business to 47.1 million. We saw a small drop in beauty, so not so pretty. THG Beauty adjusted EBITDA of 10.6 million. That was 17.7 million this time last year, impacted by one-off industry destocking in manufacturing. You've only got to look at the big long-term chart for THG, where we saw the record highs back on the 11th of January down to these record lows, losing 96.26% of the value. And for those that sold out on that thinking it couldn't get any better, unfortunately you've missed out on what is essentially 100% gain on the values from the lows. But nonetheless, it is only a small incremental gain. Yesterday, the stock market saw THG close down 4.58% to 87.6. If you're long on this, going into the numbers, going to the start of today's trade, your stock goes underneath the 100-period moving average at around about the 84 pence level. 87.6 is where we're opening. The price target is up here if you're long on this, up at £1 a share. Arm, the chip design company that supplies core technology businesses, including Apple and Nvidia, has priced its initial public offering at $51 a share. And it could be the motor behind some of the upside potentially expected today on the US markets. Now, this pricing makes its fully diluted market capitalization at over $54 billion at the $51 offer price. The offering is at the top of Arm's expected price range of between 47 to 51. So it's blown away all of the doubters on this. The company will start trading today under the symbol ARM, provided that the 95.5 million shares sold are out in the market today successfully. This would raise $4.87 billion for Softbank, Is this a good deal for Softbank? Well, the valuation is at 54 billion, 10 billion lower than Arm's valuation when Softbank bought the 25% it didn't already own the business, but it's 14 billion higher than the price agreed with Nvidia before the transaction was aborted. So now Arm is riding the wave of what some are perceiving to be a new era for IPOs in the market. I don't see it. It is coming up from an extremely low base. Nearly a 2-year pause in IPOs. It's set to be the most significant listing, though, on the markets for the year so far. So ARM Holdings getting underway on the Nasdaq, on the New York Stock Exchange, a little bit later on today. So from that success story, let's take a look now at one of the companies that over the years has provided some interesting investor insights and opportunities. Adobe, reporting after the bell this evening. Adobe's forecast to post earnings of $3.97 per share, which would be a 17% increase in the same quarter this time last year. Revenue seen rising 10% to $4.9 billion almost. Adobe shares are doing well. It's not an all-session stock on the IG platform, but I thought it's worth looking at them anyway, just to show you what's going on. Stock posting a new 52-week high on Tuesday and has gained nearly 37% in the past 12 months. This move up that we've seen will be potentially possibly beaten tonight if we see some good numbers. It's not too far away from where we closed out at $553.61. The highs that we saw there on the market at $570 a share. And Adobe, if it produces some good numbers, has the capacity to reach us up to levels not then seen since December 2021. But it depends on what the outlook is like. And if it's not particularly good, then we could well see a drawback down in shares. Now, let's move on to take a look at what's happening with some of the commodity markets. I want to begin with the price of US crude and Brent yesterday up at new 10-month highs compared to yesterday morning. At the same time, oil prices, though, a little changed. WTI hovering nearly 88, 88.60 at the moment if we look at the chart for oil is pushing up. But yesterday morning around 9 o'clock, it briefly rose above the $89 and set a fresh 10-month high. All this coming after yesterday afternoon, the EIA crude oil inventories confirmed the API data Tuesday with increases across the board. Crude oil stocks rose by 4 million barrels, gasoline stocks rose by 5.6 million, and distillate stocks up by 3.9 million barrels of oil. Quick look at spot gold on the way down at 1907. In fact, yesterday we touched levels not seen there since the 25th of August. I want to update you as well on what's happening in the price of New York cocoa. The only other area of the market I want to focus in on. This is a very long-term chart going all the way back to the early 1980s. This is New York cocoa, very, very close to breaking these 12-year highs that we have had. This is all down to the Ghanaian government yesterday announcing it's raised cocoa prices by 63%, supporting key agricultural communities, according to the statement yesterday. This is New York cocoa. I want to show you what's happening in the London market. The London cocoa market is seeing some interesting moves at the moment because that has a longer term, I think, on the chart. There we go. This chart goes all the way back, in fact, to 2014, actually. But you can see this is a new high at 30.86, and it continues to build on that. Yesterday, it closed out absolutely the top of the candle, indicating there are no sellers in the market at that price. That's it. We're back at 10:30 with charting the markets. Just before you go, just a quick update once again to let you know that we are expecting gains across the board with the London markets at 5-week highs. Watching out for THG Group at the start of today's session.